All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hold on, I'm gonna make sure I keep forgetting to put this. Hold on, as a reminder, starting the Morning Edge now. You can log in here through the website. Click icon. Okay. I just want to put that in the Forex Flow chat room. We have, like I said, a lot of people are out this week. Steve's out, but Steve's going to join us today. He might actually be here right now, but he's going to be joining us today. And when he gets here, you guys are listening in, right? When he gets here, you should ask him, what the hell are you doing here on holiday? That's what you should be asking Steve when you hear him today. But we're gonna go through the face or Morning Edge. We're gonna go through the bias chart. I gotta pull that up right now. If you guys are kind of paying attention here, I've closed out a lot of my dollar longs, and I actually closed out my yen pairs. Short the euro yen and Aussie yen. I closed those out. I was long some dollar Swiss, and I closed that out too for a loss from Friday. And I'm taking some profits while I can. And as I told you guys, over the last couple of weeks, don't get yourself into a big don't get yourself into trouble. This is not the market where you want to be like, in a position and taking big losses. Like I took my dollar Swiss off right here in the mid 30s. I bought this at the end of last week, and I was trying to pick it up on this little dip down to 91.70, and I took a loss in it. I just don't want to stick around. I mean, I just can't let my losses turn into big losses, right? So you gotta be thinking about that when you're trading. Just make sure you just manage your risk at all times. Okay. All right. Because it's hard to make it back when you take some losses. So let's go through the charts and let's see where we're at with everything. So here's the euro. Oh, by the way, I took my euro off for basically a flat. I was short it last week, and it kind of ran up in my face a little bit here. And I was like, okay, well, I'm just going to take it off for, I took it off for a few pips, nothing exciting. But I do feel that the euro dollar, will resolve itself probably this week. And the question is, where are we going to go? And I think if you take this trend line off, that's the that was the trend line that connected this low and that low right here. So the low from November to the lows of March, that was that trend line. I think you have to just be more respectful of this range right here. I think this range is going to be really key. You can see with the red boxes, that I think is what we're dealing with. For now, though, the resistance is right here at 118.10, 50% retracement. Sorry, guys, didn't mean to yawn on you, but I got the Monday yawns. So 118.10 is going to be resistance. I'm going to keep us in range for now. I have a bearish bias, just so you guys know. Meaning, I think the euro is going to eventually break lower. I think eventually we will do this. I just don't know. It's just I think we have to just maintain a range while we're holding above this 117 level. All right. Speaking of which, support today is going to be right here, 117.50 and then 117. So I'll write down that 117. Okay. So sterling, I personally thought we were going to do this. And then it just kind of screamed up early this morning. Yeah, here's the thing about what you're seeing here. This is not relevant anymore. This flag, and I'm not saying that we can't rally. I'm just saying you can't measure it. Well, I'm not measuring it as a flag anymore. I'm not going to measure it like this. So even if we break out, it's not how I'm viewing it. I actually think that because the flag itself has exceeded more than 50% of the flag pole. So, well, let's do this. That doesn't mean we can't, break higher out of this, channel and move to resist. Oh God, I wanted to say something today. This has nothing to do with the market. I got to ask you guys this, and then you guys can answer me as I'm doing this analysis. Does anybody have HBO Max? Anybody? If you have HBO Max, let me know, and then I'm going to continue on. All right, so here's our analysis, or this is the channel. I think it's a channel that can take us back up towards resistance. I believe this is like a bigger inverted head and shoulder pattern. It's what we're developing, but support right now is basically 137.90. And resistance will be right here, because if we can get above 139, that'll help us get back to 140. But 139 is resistance today. And I'm going to keep the sterling in range as well. Aussie still bearish, but you look where we're holding support, right? And this is, this flag is almost not doable either. It's like now we could be in a bigger flag pattern that looks like this too. So just it's not this, could be that, could be this, so I don't want to disregard a possible flag, but we have been consolidating here for a long time, obviously. So channel support is going to be at 73.20. I asked the question if you guys have HBO Max. If you guys have HBO Max, let me know. While we're below 74.20, stay bearish. This has nothing to do with the markets, but Paul has HBO Max, Chad does, Gavin does not. There's this show called The White Lotus. It just wrapped up yesterday, but it's a limited series. There's 5 episodes. They're an hour a piece. My wife and I, it was Saturday night. My son's got COVID, so we couldn't go anywhere. We didn't want to do anything. Brian says no, doesn't have HBO Max. So my wife and I, like I said, we were stuck at home this weekend, not hanging out with anybody, not doing, no plans because of my son having COVID. And we watched that show, The White Lotus. We started it, Saturday evening, after we ate dinner. We were like, pop some popcorn and said, all right, well, let's try it out. Dude, that show is crazy. And the season finale, or the limited series finale, was last night. That's a real some of the best acting I've seen on screen this year, I would say. Just in case you guys have HBO Max, it's called The White Lotus. The acting is really good, and it's a bizarro story. It's so crazy. It's so good. Anyway, it's good. I thought it was really good. Anyway, just giving you guys a recommendation. All right, here's a Kiwi. As you guys know, we have this this consolidation here. Plus, Hawaii is beautiful. It takes place in Hawaii. Carl said, waiting for Dune, and I'll try it. Yeah, me too. We have HBO Max because of my kids and, you know, Suicide Squad and all that. And by the way, the new Suicide Squad is great. We had a ball watching it. It was so funny. Anyway, sorry guys, I'm off topic, and it's Monday in the summer markets, blah, you know. Anyway, so the top of this triangle is right here. Obviously, if we break through 70.50, let's just call it 70.55. If we break through 70, well, if we break through 70.50, this is an hourly chart, right? Then we should challenge the upper end. So I'm going to write down 70.50, then 71 cents, right? And then support is 70, and then 69.20. So 69.20. And just remember, the Kiwi is holding up really well. Okay. Dollar Canadian. So resistance is at 125.75. Support is at 125.10. So the dollar Canadian, we just have to watch crude oil really carefully, because I don't know if you guys are watching it. You should be. I mean, we're getting pretty damn close to, like, I'm going to crap the bed, you know, levels, right? So I'm going to set an alarm for below 66, because we start trading below there. And, you know, this dollar Canadian, as much as it's been underperforming, we could very easily spike up towards like 126.50, 127. So resistance at 125.75, support at 125.10. I'm going to write these down, but more importantly, 125.75, then 126, right? So 124.20. So 124.20, 125.10. Okay, those are just the levels we got to pay attention to. Dollar Swiss, like I said, I took a loss on mine this morning. But, you know, I got long on Friday on this dip, because I was trying to buy it into the support at 91.70, 91.71, I think, something like that. And then I took it off this morning. I didn't like the way it acted, obviously. So the 618 retracement comes into at 91 cents. Resistance today on rally is going to be probably 92 cents. I mean, it's kind of hard to buy the Swissy in this environment where stocks are now starting to look a little dangerous. And and you can see all that strength coming in the yen as yields are coming down too. And if you were in the chat rooms, I got asked by Steph asked, "Hey Blake, are you going to hang on the dollar Swiss?" Here, like, I'm going to share this with you guys from last week. Today's the 16th, so I got to go back to have a great weekend. Oh, okay, this is probably right. Oh, here. Steph says, she asked me, Blake, thanks, Blake. You're going to hold your dollar Swiss over the weekend after seeing equities close. And I'm like, you know, yeah, I am, but I'm also short Aussie yen and Euro yen, which I'm hedged with. Okay. That was conversation as of Friday. So now this morning, you know, I took profits in Euro yen, I took profits in Aussie yen, and I took a loss in the Swissy, right? So you guys can see how, if I'm going to hold a position where I'm just not really too comfortable with it, like I really wasn't on Friday, I just want to make sure I'm hedged it with something. So that's it. Anyway, I just wanted to point that out so you guys know why I was long that and why I held on to it. Okay. Going to the dollar yen, or sorry, move my way down. US dollar Norwegian krona. I like, you guys know I like dollar Norway. I keep a long exposure in the US dollar Norwegian krona, just so you know. Because I think it's eventually going to break out. So 870 is still support, big support. Support for today, just in case we dip a little further, is going to be right here, the 78% retracement. So I'll write down 877. 877. I don't think we're going down to 870 today. If we do, you just have to thank your blessings or count your blessings that we actually made it down there. So for the I'm trying to write this down. This is where resistance is today. Previous support, current resistance. So this zone right here, we'll just call it 880. I'll just call it roughly 889. And while we're above while we're above 870, you guys know I'm just still bullish. So nothing's changed there. Dollar max. $880. Oops. 880. Resistance back at 220. So that's it. Same old, same old. 1980. 20. It's a stupid range. It feels like it'll never break. Dollar yen. Damn, we're just hit the 78% retracement. I can't believe the dollar yen's fallen as aggressively as it has. I mean, I'm assuming, well, I mean, we got that little false breakout up there, but I'm really, like I said, I'm very, very surprised we broke down as aggressively as we have. I was happy about it, obviously being short Aussie yen and New Zealand yen, or Aussie yen and Euro yen, but still, this is like a pretty aggressive move. Let's figure out where the 88% retracement is. So we'll just call it 109. And then resistance right now, if we can get above 109.55, might have a little bit more recovery, but 109, oops, 109, 109.55. I still think we're all in a range. Dollar index. Support, the 618's right here, but you have this previous high, that support. So this is all 92.30 is support. Resistance is going to be up here somewhere. Dude. 92.85, 92.30. Keep us in a range. S&P. S&P is coming off a little bit. Look at the dollar Canadian just hitting new highs. Crude is just so weak, guys. Crude is so weak. By the way, Jane in the chat room, she was bullish the Euro sterling, and I said, man, that's I think a good idea, because I remember I was looking at it last week coming out of the wedge, and she played it on the long side this morning at 84. She put her trade in the trades room. Anyway, it looks really, I like it. I like the Euro sterling. I think it looks pretty bullish here. So just little heads up. Hold on real quick. Okay. Let me see here. Finishing up with Bitcoin, S&P, and then I'll let Stelios take over. By the way, Greg is going to join us tomorrow morning. Oh,
what about me?
Well, you're supposed to be on vacation.
Really?
Yeah.
I didn't receive that memo.
Well, you're in some island somewhere.
I am.
Yeah, you could come over here to Arizona and come look at my rocks in my front yard if you want. It's much more pleasing. So gold up in resistance here. Now that we're above this, we should find resistance at previous support, should be current resistance. This is also, you can see the broken trend line. That's going to come in right here at 1790. Support will be any dip back down to 1750. Silver, it's really struggling, can't get back above 24. So I think while we're below 24, we have to remain bearish. I mean, but I don't know if I would be selling silver while we're below, well, gold is holding up, but I'm just saying that I think it's got more of a bearish slant right now. Support will be down here at 23. Bitcoin still struggling at resistance, which is 48, this is 618, but just basically 48,000. And then support will be at 42.5. While we're above 42.5, I think you have to stay bullish. 48K is key. And the S&P, as you guys know, same old, same old. Is Stelios here? I know he was here earlier. I don't know if he's here right now. Are you here still?
I am here.
Oh, you
yes.
are. Okay. I just want to know if I need to take a picture of this.
Don't worry. I'm here waiting for you.
All right. All right. I'm trying to finish up. I know you're like any day now. 43.75, same crap. And by the way, just so you guys can see it, this is the ascending wedge, big ascending wedge, right? But notice how the ascending, the support that we've been noting for the last couple weeks, it now intersects with that trend line. So it's now becoming really, really important. So if we, for some reason, make it back down there, that is going to be very, very critical support. Resistance from here, we can't rule out a move to 44.95, which is the top of that wedge. I know I've been writing down 44.95 or 44.96, but anyway, it's bullish. Okay, so there is your bias chart.
Hold on, let me take a snapshot.
Steve, how's Corfu?
Mixed bag if you're a Greek.
Mixed bag? Why is it a mixed bag? You're on an island in Greece. How can it be a mixed bag?
Bad signal for the vast majority of mobile, for all mobile carriers in most places, and really bad road network. Really bad road network.
Road? You mean like driving?
Yeah, yeah. Yeah.
Well, there's a solution for that, Steve. Stay in the hotel and don't come on to the webinars.
Exactly. There you go. That's it. That's it. I 100% agree. There. You know what? I was just telling the guys and gals here, and I'm going to say this to you, and I'm going to let you go so you guys can continue on. But I watched a show with my wife this weekend because we're confined, we're quarantined, if you will, with my son having COVID. We watched this show on HBO Max called The White Lotus, and it's a story about, it's a Hawaii resort and the messed up people that are staying at the resort and that work at the resort. It's a really, really interesting story. I won't ruin it for anybody, but I will tell you this: one of the cool things about the show was the kid. He's 16, right? And he's attached to his electronics, because Steve just mentioned, like, we have horrible internet connection. This kid who's 16.
Yeah, I just mentioned that due to work issues, as you understand. Otherwise, I wouldn't care.
I understand. But this kid is he's attached to his, like, he can't do anything without having a phone or his iPad or his whatever. Always attached to electronics. And by the end of the show, he has this transformation, which is really cool to see, especially in this generation of kids.
Yeah.
It's really awesome. I cannot recommend that show enough to watch because it's so interesting. The acting and my wife we were stuck for 4 hours in front of our TV on Saturday night watching, and we could not stop watching. It's like a train wreck all at once. It's amazing.
Interesting.
It's a great story. Yeah, it's worth just trying out HBO Max for for a month just to get it and watch it. It's awesome. Then watch the Suicide Squad while you're at it. But I'm gonna let you guys go. I just want to say, Steve, enjoy your time away from. It's just nice having a change of just away from your what you're looking at. I mean, look, I love my house and I love where I live. I love our neighborhood and stuff, but just getting away is just nice, right? So yeah,
I'm doing that next week. Remember? So
I'm very envious of you guys. I've taken one vacation in 2 years. That was for a week, and boy, I'll tell you. All right, guys. Anyway, I'll let you guys go.
Thank you, Blake.
Enjoy.
Thank you, mate.
All right, thanks, guys.
So let's talk about the beaches. No, I'm kidding. How is it in terms of? Is it a lot of people or not? Is it busy?
I would assume that there are a lot of people. That's why we haven't tried going to any one. For people that don't know, yesterday was like a big national holiday. And these 3 days, nobody works and everybody's out. So they recommended we stay away from going to the sea or whatever, unless you want to go late in the afternoon. And having seen that's why I said, people that don't know, Greece has a lot of islands. The vast majority of them very beautiful with amazing scenic places you can visit, etc. But during the most busy days of the year, the road network is very important because the vast majority of islands have smaller roads. And if you want to go during rush hour to the sea, then you end up having to go down a small road to a beach. And there are hundreds of people trying to get there and park at
it gets congested.
Almost non-existent, areas that you can park. It gets insanely congested, right?
Okay.
That's why I said it's important. That's why we've stayed away from it, and we'll start, going tomorrow.
Cool. Okay. Markets wise, kind of indecision. Equities are a little bit lower. Yields are falling. So, the 10-year US
and USD yen is following, by the way, due to this is one of the things I was looking at.
So 10-year US are below 125, it's like 123 and a half now, whatever it is. So, as I was saying on Friday, we had a couple of days of rising yields, and people have been saying, oh, is this the beginning and all that? And I said, not so fast. You have to wait and see what happens. And for me, it's going to be difficult to get a proper trigger ahead of Jackson Hole if we get that. And unfortunately, we're ranging,
especially in the middle of the summer.
Yeah, and we're ranging and we're chopping. And really, Blake said something on Face. Was it Blake? I think it was Blake. Yeah, and he said that he was talking about one of his trades, and he said, I just took some profits there. And you know what? In August, in these kinds of markets, if you're in profit, I'm like, yeah, take it. Next trade. End of story. Obviously, you let your trade run a little bit, but I would have much less patience than I usually do now. So these days, markets are very choppy. They're ranging. They're trying to, scare long, scare short, scare everybody. You get these weird moves in illiquid times. It just needs really a lot of attention. And a lot of care and less risk than you usually put on. That's my advice.
Very true. I totally agree.
Yeah, but otherwise, metals had been down all morning. Silver was down 1.5% at some point. Now gold is positive, silver is flat. So they're trying. I still think we're probably going to see one more flush lower just to take out all these people who in the last couple of days, since basically the flash crash on Sunday last week.
Which so far has marked the bottom, especially gold.
For gold, yes. For gold it has. For silver, not yet.
We are currently... in gold, we're currently like, what is it, 100 and sorry, it was 16.19. We're almost $100 higher from the flash crash low, right?
The flash crash lows, yes.
That's not an insignificant move.
Not by any means, no. But still, gold is trading a lot better than silver. I still think, because there was a lot of people who were saying, now is it now the time to buy after the flash crash? And it just feels we have one more flush lower. Maybe not. You never know.
We might. I'm monitoring this channel, Stelios, in the case of gold. If we do break to the upside, I'll start seriously thinking that the flash crash might have marked the low.
Maybe, yes. I'm still waiting to see, but you guys know I'm long a small position of gold and silver and miners and all that, which is it's out of the money now. But I want to add more, either lower from here or on the breakout higher from here. I don't care which one really. Brand says August extremely pinching pip scalpers paradise. Yes, August is that. And what else? Cryptos are pulling back a little bit, but they've been on a tear over the past few weeks. And I have a friend who bought Dogecoin at 17 cents and he sold at 34. He made 100% in a few weeks, I think.
That's amazing.
Nice. A couple of weeks, 3 weeks. Yeah.
Yes. That is actually amazing.
Yeah. Anyway, if you have the guts to do that, well done. Otherwise, the Bund I'm still watching. It's heading towards 177. I will reiterate 178 handle. I will start selling. Treasuries I'm not touching yet, but I think equivalent levels. I'm going to have a look at those.
Bund still within this ascending channel, within the much larger descending channel, and yes, we are much closer to the top of the long-term channel. So from a risk-reward perspective, it makes sense to want to try the short side. The closer we get to 178, 178.20 is where this trend line passes from as we speak. So I think it's probably a very decent proposition. And speaking of which, we should also note that the DXY got rejected once again from this trend line resistance. So we don't have a breakout in the DXY. Now, that doesn't mean that we can't have one, but it means that we're not doing it as we speak. The 10-year yield, as you said, Stelios, turned lower once again, and that, of course, affected USD yen. I had to redraw the channel here. So, I had it drawn differently. I redrew it now. Passes from 3 points, having to do with support, 2 points from resistance. And we're probably still consolidating in a larger type of formation here. We might be still in some kind of a corrective pattern. So I'm not necessarily implying that this is like a bearish development medium term. But yeah, definitely something to note. In general, as you said before, Stelios, nothing has really, from a technical perspective, nothing major has really happened. There are a few exceptions and a few things I was paying attention to. For example, in the case of Euro USD, in the case of the DXY, we got a rejection for the time being. In the case of the Euro USD, we got this false breakdown from this symmetrical triangle. For the time being, a false breakdown, because we ended up rebounding from the previous low, also 38.2% fib. So no breakdown here. We got another rejection in the case of the Aussie from this descending channel. So Aussie is not breaking higher yet. In the case of the Kiwi, we're still consolidating. I was also monitoring the Aussie yen and the Kiwi yen, and I'll show you why, because I think that from a technical perspective, these two are actually producing some interesting developments, because I look at the Aussie yen and it looks like it's breaking down from this pennant after consolidating somewhat the previous move lower. So Aussie yen seems to be starting another move lower, and the Kiwi yen, although holding its ground better, still got rejected from this channel trend line resistance, and it seems to be gaining some momentum to the downside. And even within this channel, there is a decent amount of room lower. Now, this is a big if, but I'm going to say it right. If we're starting the week and we're seeing, I'm zooming in here in the S&P, we're seeing some pressure in equities, right? We're like 0.5% lower. Somebody will say, of course, so what? Yeah, and obviously, if you zoom out, so what? But if for some reason the market wants to do some selling off this week, these specific pairs we talked about, Aussie yen and Kiwi yen, have indeed the potential, because we know that they're very decently correlated to risk assets, have indeed the potential of pushing lower, for a few days. So, if we do get some risk off, these developments in Aussie yen and Kiwi yen should actually produce a decent follow through, might last a few days. So these are more or less the only technical FX opportunities I'm seeing out there as we speak, because everything else seems to still be in choppy waters, in this weird environment of a heavily manipulated financial market type of environment that we've had, plus the summer lack of liquidity. Plus, we don't have any real news coming out as we speak that might stoke some volatility. So, the combination of all that, creates this weird situation. Now, having to do with the VIX of some kind of a rebound, the VIX seems to be having a nice rebound today after having some divergence playing out here. Still, by the way, let me know if my internet, I know, is not that good.
You're good. You're good so far, yeah.
Okay, I've got some messages that my internet seems to be a little bit unstable or whatever, because I know that it's actually it's a nice example of how socializing things never works well. I wrote it in the chat room on Friday. Just another free lesson of economics. What happened here in Greece is every year I used to pay 70, 80, 100, 120 euros, depending on how many days we were away from home, so I can buy enough internet, for me to work remotely. And internet from mobile providers was working perfectly. I had good speed. I could do anything I wanted remotely, and everything was fine. So this year, the smallest of the three companies, Wind, decided to offer that plan that was like with 10 euros, you have unlimited internet for a whole month. And then the other two companies decided to, to follow suit, so they don't like lose market share having to do with mobile internet routers and all that. And they did the same. The result being that 2 weeks ago we had outages in Vodafone. 1 week ago we had outages in Cosmote, and following that they decided to cap under the table. Of course, they don't announce it, but it's more than obvious it's capped. Cap internet speed because they can't service all the people that had the ability to get almost free internet. So now people that actually need good internet to work remotely don't have the ability to pay something extra and actually get the internet they want, because now everybody has free internet. So yeah, that's what happened. And I'm striving. I have internet from all three providers. Every day I'm striving to get a decent enough internet to do some basic stuff, and it's been hard. I really hope that they're going to learn their lesson, and next year they're going to do something differently.
Let's hope.
In any case, the VIX is rebounding after creating a higher low for the time being. Of course, is this enough of a signal to go short equities or what? No, it isn't, right? It isn't. But I would like to see some sell-off starting at the beginning of the week. It's a good day of the week for something like that to happen, because there is a bigger chance you're going to see follow through for the rest of the days. So let's see what happens today. We've had all these prolonged divergences, and if something like that happens, yes, we should expect that the pressure in yields is going to continue a little bit, because some people are going to be switching from equities to short-term maturity bonds, since it's like easy short-term safe haven. That should put more pressure in USD yen. That should also put pressure in commodity currencies, and the combination of them, meaning Aussie yen and Kiwi yen. Give me 1 second. The combination of Aussie yen and Kiwi yen should actually do very, very well to the downside. That's why I began by stressing out these as potential opportunities if we do see this, risk of move last more than a few hours, which is going to be a nice surprise, since usually we get risk of moves during the past few months lasting from anything between a few hours to maximum a couple of days. In any case, let me see if there was anything else. Yeah, we already talked about gold since you brought up the issue. Blake brought up the issue of crude oil before, and I wanted to make a mention here as well. We were discussing about crude oil last week, about the two potential technical formations we should be looking at here. One of them was the possibility of a symmetrical triangle, which you can see here in red. We seem to be breaking down below it currently. Now, I remind you that we attempted to do the same last week, but by the end of the day, we had actually retraced big part of the losses, meaning that we never broke down from it. Now, if it does happen today, that's a big if, because it's still early on the day, then we open the possibility that this is a channel. So, it's the blue formation you should be looking for, right? Which opens the door for a deeper corrective move, like towards 62.5, roughly. Now, until or unless we break through this channel, I don't see any reason why you should consider this anything else than a corrective move lower. But I wanted to stress out here that irrespective of what crude oil is doing, natural gas seems to have found support in the area we had indicated as the first area of support, which was this horizontal support resistance area at 380. And I remember specifically multiple times saying last week that don't turn bearish natural gas as long as we trade above 380, because we haven't even broken a single support area, right? So very nice reaction, and outside white candle so far in natural gas from the 380 support level. I think that's what anybody that's bullish would want to see. Now, a fast look in silver, since we focused mostly on gold. Keep in mind that silver, despite the flash crash below it, is holding the confluence of supports at $23. And as long as it does, I can in no way turn bearish. So above $23, there is no argument in my mind. There's no technical development that would turn me bearish, even in the short term. Against $23, I think it makes sense for somebody to be on the other side of the market. I think that's more or less this is what I had in mind to talk about. So I'll be more than happy to go through questions. Lorraine is asking, are you out of your Aussie USD? Okay, judging by the time that was directed to Blake, so I guess he already answered that. I'm assuming. Laura, have seen it in the last episode yesterday. Okay, that was that was a conversation about this that series. Lorraine says, Steve, post pictures on Twitter. Yes, I'll be more than happy to do so. Actually, yesterday we went to a very beautiful place that's called Achillion. It's in the memory of Achilles, Achilles from the ancient history / myth story, which is very beautiful, and some very scenic pictures. I'm going to do that, I promise. I think people will like it. Simon says, oh my god, the world is forcing Steve to have a holiday. Yeah. August is extremely pinching Pip Scalper's paradise. Yes, that is very true. August is not a month that favors trying to ride trends. I would totally agree with that. John says scalping is right. Look at the 1 hour GBP pairs now, totally reversed. Yeah, something. Looking at the daily, it's more than obvious that the cable has no intention to doing something imminently, right? I still favor an eventual break higher, though, judging the fact that we came out of this formation that had clearly corrective characteristics. The move out of it had good momentum, and the pullback from the highs seems very corrective, right? So, there is no guarantee, obviously, there is no such a thing. But I have to say that in the case of the cable specifically, I would favor an eventual break higher. Now, if you look at the pound yen, it's more of a mixed bag, and clearly, if USD yen turns lower from there, it's going to be harder for pound yen to perform better. So, in this case, pound USD should be doing better. And having to do with the pound crosses, if we want to look at them as well, in the short term, we have an attempt here from the pound Aussie to break higher, which makes sense because I've explained before that risk-off environment favors these crosses moving to the upside, right? So if we do see a continuation lower from what seems to be happening so far in this initial move lower in the S&P and the rest of the indices, pound Aussie is nicely positioned in the short term to break above this symmetrical triangle and continue to the upside, with 91.35 being the next upside resistance. And in the case of pound Kiwi, we're still contained in this channel closer to the channel's trend line support. We might see another attack of the higher end of this channel to the upside. Now, if and only if we do see some follow through in risk off. Okay, any questions, anything you want us to look at, guys, gals, before we
no, we want you to go to the beach. It's fine.
Nah, I'm actually gonna. The moment I'm out of this webinar, I'm jumping in the swimming pool because. And we might go tomorrow actually to the beach, which is gonna be nice. UPST and ZM. Let's see, UPST. Oh, this seems to be having some interesting upstart holdings. Okay.
No idea what that is.
Me neither. Yeah, but it seems to be in an uptrend, right? Now, Overdone clearly had a very positive reaction to earnings. We can see here the earnings created that runaway gap, and this move higher. Now, the closer we get to this channel trend line resistance, of course, the worse the risk reward is. And yeah, I wouldn't assume that you should be chasing this higher. Now, I think we might see higher prices, but with the closer we get to there, you should be careful. Now, if you're long, yeah, I know somebody will say, we are currently trying to form a shooting star. I'm going to tell you it's too early on the day to care about that for the time being, right? So if you're already long, I would have to say that I would be holding to my position and waiting to see how this is going to develop. For the time being, it seems to be doing just fine. Now, zoom. Yeah, nothing has changed here. Watch this rectangle. Support being 340 roughly, resistance being 403. We break in either direction. You should look for an extension of that, of an equivalent height, meaning 280 to the downside. If we break lower, and what is it? 467 if we're talking for a break to the upside. Let me see what else. FSLR. There is a good chance this has broken out, right? Yeah, there is a good chance this has broken out. Now, I know momentum is not fantastic. And there is always the possibility. I'll show you what my thoughts are here as an alternative interpretation, right? Now, an alternative interpretation would be something like this. So a more complex corrective move that would play out like this. Like this. Okay. So these are the two scenarios I see from here. So be a little bit careful as long as we're not breaking above this trend line resistance. Right. But if we do break above it, I don't see any other technical restriction for us to hold us from moving higher from here. Done. Let's see what is done. Yeah. These charts have become so messed up. I think you can be bullish above $78. That's what I think. Above $78, you can be bullish in TAN. Below it, it becomes, the situation becomes very complex, and then I would just stay on the side and, let the market provide a little bit more clarity. But risk reward being long against 78 seems, solid. Okay. I think that's
Thank you, Steve. Thank you, everybody.
Thank you, guys. I'll post
tomorrow.
some pictures later.
Thank you, Steve.
Have a wonderful rest of the day. Bye.
Cheers. Bye-bye.